Heidi, a much better day today for the markets compared to yesterday.
Most definitely, it has been a very busy day for me. But yes, indeed, Timbukile, the oil share has called back just under half of what it lost in yesterday's global market chaos around the oil price crash and the coronavirus spread. Markets are up on the hopes of stimulus in the major economies. But the numbers will tell you that we are far away from the highs we saw earlier this year. Sasol continues to be battered because of its link to the oil price, but the likes of BHP Billiton and most banks recovering well. Both platinum and gold miners are still in the negative. Gold miners in particular are down because investors are shifting from gold into equities. If we take a look at your commodities, oil has stabilized after it suffered its sharpest drop since the 1991 Gulf War. At $37 a barrel, it's up 10% following yesterday's 33% fall. If we take a look at your currencies, the rand has gained some strength today after falling to its lowest since 2016 on Monday. It's hovering around 16 rand to the dollar. Much weaker than its strongest level today, around 15.75. Analysts say the new round of load shedding may have caused the latest weakening.
So the rest of us, Heidi, are starting now to count our money against the number of days left until payday, but FNB is not having those problems.
No, most definitely not. It seems as though they're taking some of our money. First Rand has posted a 5% rise in earnings despite the difficult economy. It's the parent company of First National Bank, Westbank and Rand Merchant Bank. FNB's earnings grew by the same margin, but much of that profit came from credit impairment charges, indicating the strain consumers are taking at the moment. FNB's CEO says the global economy, with its current headwinds, including the coronavirus, will offer little support to the South African economy.
There certainly is a lot of strain out there. We know strains. It's like in our agri portfolio, for example, we've had a few strains in the last few years as a consequence of the droughts. So we're used to strains in portfolios. The challenge is always to respond properly on those, and you can't just be a bank there for the good times either. You have to be a bank there into tough times too. So that really is the message for us into the next phase. Is that we have to play a big role to keep the country going, and to keep our economies going. As you know, banks can't close their doors, so we're open for business. We look for opportunities for growth.
From rich to broke, SAA and unions back at it.
Most definitely, Timbukile, and it appears as though the National Union of Metal Workers, NUMSA, say they will consider their options after SAA Business Rescue Practitioners announced it will be going ahead with the retrenchment process. Unions have opposed job cuts at the airline, even taking the practitioners to the Labour Court over their decision to cut jobs. The practitioners are under immense pressure to make sure that they implement government's plan to get struggling SOEs on the road to recovery. Unions say they want to make sure the plan is in order to determine how many workers will ultimately be affected. The draft plan seen by eNCA says retrenchments at the airline will cost government over 500 million rand.
We predicted that the business practitioners would, at the 11th hour, suddenly issue us with Section 189 to just very clear issues for us off the bat are the fact that to date there is no business rescue plan. So again, what are they basing this on? What is the rationale when they haven't even begun the process? And to make matters worse, as creditors who are recognized under the Companies Act, we've not been engaged at all during this entire process. So yes, we will be responding in more detail to this vicious attack by the business rescue practitioners. But what we want to say off the bat is that we will be doing all that we can to protect as many jobs as we can.
That's it from the Money Desk. Timbukile, back to you.